Welcome to The Explainer. We're diving into a massive shift happening in global finance right now. Trillions of investment dollars are starting to look beyond Wall Street. You see, for more than a decade, the mantra was simple. But now? Well, the script is changing.
Okay, so here's how we're going to break it all down. We'll start with that long-held belief in American market supremacy. Then we'll dig into the psychology that kind of keeps money local. After that, we'll track the evidence of this historic capital rotation and figure out why it's happening now, before wrapping up with a whole new playbook for this new era.
For over a decade, really, there's been one investment strategy that has absolutely reigned supreme. Buy America. It was simple, it was powerful, and wow, was it effective.
And it's really not hard to see why. I mean, since the 2009 financial crisis, the U.S. has just been an economic powerhouse, fueled by incredible growth, and, let's be honest, undisputed tech leadership. The recent AI boom just threw gasoline on that fire, delivering these staggering returns, like a 26% gain in 2023, and just hammering home that powerful investment mantra.
Now, this is where it gets really interesting. Look at how that dominance has completely reshaped global portfolios. The U.S. has ballooned from about 50% of the world's leading index after the financial crisis to a mind-boggling 70% today. I mean, that is an incredible concentration of global capital in just one market.
But it's not just about performance. There's this powerful psychological force at play that keeps investors kind of anchored to their home turf, even when it might not be in their best interest.
It's a phenomenon called the equity home bias puzzle, and it's actually a huge deal. It's considered one of the 6 major puzzles in international macroeconomics. It's really just this simple idea that we prefer what we know, right? What feels familiar. And that applies even to our investment portfolios. And this table just illustrates that pull perfectly. I mean, just look at the US and Japan. Investors in both countries keep nearly 80% of their equity investments at home. It's this powerful preference for the familiar, and for Americans, let's face it, it's been a winning bet for a very long time.
But, and this is a big but, we're now seeing some really compelling evidence that this long-standing trend is starting to reverse. That Buy America doctrine, it might be facing a Buy America moment. The tide is definitely turning.
Get this. In just the last 6 months, U.S. investors have pulled a staggering $75 billion out of domestic equity funds. This isn't just a trickle, it's a flood.
And to put that number into perspective for you, this isn't just some minor shift. We're talking about a historically significant rotation of capital. It's the largest of its kind to start a year in over a decade.
So, where's all that money going? Well, investors are chasing performance, and the data here is crystal clear. Over the past year, major international markets have dramatically outperformed the U.S. Japan's Nikkei is up 43%. Europe's STX 600 is up 26%. Both are just blowing past the S&P 500.
Okay, so what's really driving this great global rotation, and why is it all happening right now? Well, it pretty much comes down to 2 key things.
The first big driver is valuation. To put it simply, U.S. stocks just look expensive. The S&P 500 is trading at almost 22 times its expected earnings. Now compare that to European or Japanese markets, where you can buy in at a pretty significant discount. Investors are starting to see much better value abroad.
And the second driver? It's the weakening U.S. dollar. As this quote explains, high growth is great for a currency, but high inflation, not so much. And when the dollar weakens, any money an American investor makes on foreign stocks is worth even more when they convert it back. It's a huge tailwind for investing internationally.
So, all this brings us to the crucial point. What does this all mean for the future of investing? Is the old playbook just being completely torn up?
So, does this whole rotation signal a complete abandonment of the world's largest economy? Are global investors really saying bye to America for good?
The experts are saying no way. And the reason is actually pretty simple. The sheer size and liquidity of the American market are irreplaceable. For huge global institutions, think pension funds or sovereign wealth funds, it's nearly impossible to fully pull out of the U.S. I mean, where else are they going to put that much capital to work?
So, the new playbook isn't about ditching Wall Street. It's really all about smart diversification. It's about recalibrating portfolios that have just become way too concentrated in a handful of U.S. tech stocks and rediscovering growth opportunities in what's becoming a more multipolar financial world.
At the end of the day, the great global rotation is a recalibration, not a retreat. It's a pragmatic response to a changing world of high valuations, shifting currencies, and just the simple, timeless need for diversification.
And that leaves us all with a pretty big question for the future. As all this capital redraws the financial map, where will it find